This works every single time. I'm going to share with you exactly how to buy a piece of real estate, not just a single family home or an investment property or a piece of land, of which you can buy all of those this way. I'm going to show you how to do it, what it's going to cost you to do it, what you need to do it, and most importantly, what you need to avoid when doing it. Listen, everyone has been faced with a hardship at some point in time in their life, especially after they've been around a while like me, whether it be bankruptcy, foreclosure, death, short sold a home, loss of job, you name it. But I'm here to tell you, you don't need a credit check, you don't need a background check, you don't need a job history check. You just have to write a check. If you've got a little money, I'm about to blow your mind. Now, if you haven't already done so, you may want to subscribe to the channel. There's no cost to do so. My name is Wayne Turner. For nearly 30 years, I've done just about everything when it comes to real estate. Bought, flipped, sold, helped thousands of people purchase their homes. And I share that with you so you can have the confidence knowing that what you learn from me is from actual real life experience. So let's jump in. Now, as I'd mentioned to you, I too have been faced with hardship where I've had bruised credit, and I've purchased a home this way. I've been selling real estate, brokering real estate for almost 30 years. And 15 years ago, I'd always heard of this, but I never really tried it and purchased a piece of property for myself. So in fact, I did purchase a piece of property this way, and as a result, I'm excited to share with everyone that's willing to listen how you can purchase a home this way. As I mentioned, you don't need a job history check, credit check, or anything like that. They don't verify anything. You just have to write a check. So if you've got a little money, this is basically the way it works. These are homes that are available for sale all around the country. Every city, every state, there's homes available for sale where owners own their homes. And for many reasons, whether it be they own it as an investment property and they don't want to rent anymore, or it's an estate sale, or some people just invest in real estate and turn around and sell their homes, real estate property, investment property, even land this way. It's called owner financing, owner's terms. And it's where a property owner, a land owner, a homeowner will put a home on the market and they'll say, we will sell it to you for owner's terms. And here's how it works. You see, when a property owner owns a piece of property, whether it's land, multifamily, doesn't matter. If they own a piece of real estate, they can sell it to whomever they want, whenever they want, however they want. There's no bank involved. You don't need a bank. But they sell you the property in a way that you still pay an interest rate and it's still amortized over a term, just like a traditional bank loan, and that's normally 15 to 30 years. The interest rate varies. And once again, everything is negotiable. But what we normally see is a 1.5% to 2% over the current prevailing rate. So for example, if the interest rates are 6%, you may pay 7.5%. But what I always tell people is you're buying a home, piece of real estate, and it's not always the cost of the money, but the availability of the money. Because you got to understand, there's no credit check, job history check, background check. You're just writing a check. Now, a good question you may want to ask is, Wayne, how much does that check have to be? It's normally 10%. I've seen less and I've seen more. 10% of the purchase price of the property. So if you purchase a $300,000 home, you're going to need $30,000. If you purchase a $200,000 home, you're going to need $20,000. That's not always the case, but that's what typically we see across the board. And as I'd mentioned, all of this is legal. All of it is put in writing. Your name goes on the deed. And in most states, your name also goes on the title. Now, what that means for you is nobody's going to take the property away from you. Of course, if you don't pay, you don't stay, but it's your home. You're not renting, and this is not a lease purchase. This is owner finance properties. They're all over the country. Owner's terms, where an owner owns the home. Once they give you clear deed and clear title, you can do pretty much whatever you want to with the property. Now, you have to understand, if you don't pay, you don't stay, and they can repossess the property from you. But at the end of the day, you own the property. But there's a little bit more to it than that. You see, oftentimes when people purchase a home this way, they're so excited, you're elated that you get to buy a house. You've had bruised credit and you have cash. You've been saving some money, but your credit's bruised. Here's what people need to understand. You still reserve the right to purchase that property and get a home inspection on that property. You can also purchase and get a home warranty on that property. Now, once you do an inspection, there's what they call a due diligence period. So it's no different than if you purchased a home and wrote a contract on a piece of property, land, doesn't matter. You can have the home inspected, and once you have the home inspected, you can tell the homeowner or the property owner and say, hey, I need a survey, or hey, there's broken windows, there's a leaky faucet, there's a roof leak, whatever it may be, and you can ask them to repair that property. You have to understand, they still have a vested interest in the property. They still have, and they're holding technically a mortgage on the property, and as I'd mentioned, if you don't pay, they can take the property back. So it's to their advantage to make sure you're pleased and you have everything you need and want. So when you move in, you don't have to deal with any headaches. You just pay them the mortgage payment. Now, one thing you'll be excited for is most of these homes are vacant and you can literally move in within 2 weeks. The reason why they're vacant is oftentimes people have owned these as investment property. The tenant has moved out, they went through and put a fresh coat of paint, maybe new carpet. Sometimes they're their own home or they own the home and their job relocated, or maybe they built a home or moved out. They just want to sell the home this way instead of just outright selling it, because you have to understand they're going to put an interest rate on it and they're going to amortize that over time. So as a homeowner selling you the property, they actually make more money over time selling you the home this way as opposed to just selling it outright. Now that's a real good thing because they're opening up doors and opportunities and basically real estate to invest in, homes to buy, land to purchase for people like yourself that have a little bruised credit. And listen, bad or bruised credit isn't permanent. It's just temporary. I'll tell everyone that even if you file bankruptcy, you can purchase a house and get an FHA loan 2 years past your discharge date. Now your credit has to be a 620 or higher to be able to qualify for that. And here's what you really need to understand. When you purchase a property this way and you have equity down, in other words, you put 10% down on the property, you put $20,000 down on a $200,000 home, now you owe $180,000. And you're paying an interest rate, right? And you're paying a mortgage payment. You're paying your taxes and insurance and everything. You own it. The good news is you're also paying the principal balance down. So the property's going up in value and you're paying the balance down. So when you go to refinance the property in 2 to 3 years, you own a home in your name, paid insurance, got utility bills, driver's license, all of that's legit. Plus, you have equity in that home. And banks love it. And the reason why they love it is I always tell people, you're doing the banks a favor by allowing them to loan you money, not the other way around. When you have good credit and you got everything in order, then basically you're a golden child, if you will, for the bank. They want to loan you money. They want to give you money. That's how they have the most money, by basically selling you money. And when you pay them for a mortgage, you're doing them a favor, not the other way around. Now there's 2 more things about purchasing a house this way I think you'll find really exciting. One is you don't have to pay for an appraisal unless you want to. That runs about $400, but it's nothing that you have to do. The second thing is many of these homes are vacant. That means that you can move in within 2 weeks. You can still do a home inspection. You don't have to do a home inspection. I just always recommend anybody to do a home inspection. It'll cost you $300 to $400. They'll give you a list of things that are broken, not working to their intended function. As mentioned, you can give that list to the seller and say, hey, would you mind fixing these things? Once they fix those items, it's really simple. You go to closing. Now, closing cost on this, and it's a good question to ask, how much is closing cost? The only closing cost that you pay is basically the cost of the attorney, because you're getting insurance in your name. You'll start paying taxes on the property once you close on the property. So once you have homeowners in place, and no, there's no private mortgage insurance or anything like that. That's why the monthly payment on this is a little bit cheaper. If you recall, I said that the interest rate may be 7, 7.5%, 8% if the current rates are 6%. But you also have to know this. You're not paying private mortgage insurance, and that's the insurance policy that the mortgage companies put out on you in case you defaulted the loan when you get a bank loan. There's none of that that's in place when you get these types of mortgages, if you will, or purchases on these properties. And yes, technically it is a mortgage. Even though they're not giving you money or loaning you money, they're putting a mortgage out on the property, and that simply says in about 10 pages, if you don't pay, you don't stay. That gives them the legal right. If you don't pay for the property, they can repossess the home and take it back. That's a good thing for you, because that means you are protected. As long as you pay, you stay. Now, if you're curious to know how to find these properties, it's really simple. You typically have to have a real estate agent. You can scour the internet, you can drive around, but for the most part, all real estate agents have access to this data because it's a filter, if you will, in the multiple listing service. So when a home is listed, if it's available with owner's terms, the little checkbox is made, and a real estate agent can actually go and pull these properties and give you a full list. Now, if you don't have an agent and you need an agent in your area, you can go to wayneturner.com. We have a list of agents all around the country that help consumers, people, home buyers, just like yourself. Go to wayneturner.com, click the little buying button on there. Give us a little bit of your information, and we'll gladly reach out, talk to you, and match you with an agent in your hometown. I hope you've liked these videos. I hope you learned something. My ultimate goal is for you to learn something on every single episode.